Good guys, day one on the charts. Here we are. So, to start things off, I'm not going to be live trading just yet. I want to start you guys off by showing my areas that I find importance in and what I look for going into the new week. So, with it being Sunday evening, about to get to bed. It's like 10:35, 10:45. Yeah, it's time to sleep soon. I like to look at price before the whole trading week officially starts. Yes, Asia session has commenced. However, I like to mark out levels. So come Monday morning, pre-market, I see how price is either reacting off of these levels already throughout London and end of Asia, or what price can potentially do. And so I can do more with my morning before I actually get on the charts. Because for me, I really like to be in a good place mentally and not rush getting onto the charts so I can be my most logical self and make good decisions. So, let me show you what I'm looking for and what key areas I've marked. So, here I've marked out already areas on NQ, which is NASDAQ, and ES, the S&P 500. I also like to trade IWM or RTY and gold. But for the sake of this video, I'm just going to show you guys my NQ SPY levels because I have the most experience in those from back testing and live trading. I will in the future incorporate probably my gold trades, RTY trades, and I do dabble in options trading, which means also stocks, as I want to swing trade in the future. But to keep this video short and to the point, I'm going to show you what I found on SPY because that is primarily what I'm documenting my progress on because I'm trading on a funded account. So, to start off, looking at how last week's weekly candle closed, we see that we have this clear bullish fair value gap that was created at the end of November. And with the reaction come the end of last week, we actually respected it, which leads me to believe that is a very bullish sign. That doesn't tell the whole story, as you need a prices fractal and you need to zoom in into lower time frames to have a better in-depth understanding of what's going on. To form, well, let me reword this. It's good to know what price is going on a higher time frame because that is, kind of like what let's say it like this. That's where price long term wants to go, right? What it's showing on a higher time frame. But obviously, I'm not trading a position that's lasting a week long. I'm trading something that's lasting 5 minutes. So what I do is I take the highest possible time frame and then I slowly break it down until I get to an area where I can find a level. Obviously, knowing where price is going on a higher time frame can help me establish where price is going. So, we respected this fair value gap so far on the weekly. Coming into the daily, it tells a little bit of a different story. This looks more bearish, right? We have this downtrend right here, and there's nothing really that shows that we would want to go to the upside, right? If we keep having these black candles going down, well, wrong. So, come opening day of the new year, January 2nd, which was a very good day and very good way to start the year, may I add, we had a very important sweep of what is this? Of these weekly lows. As you see right here, price came down, swept it. This is important because price likes to hunt three things: liquidity, equilibrium, and inefficiencies, fair value gaps. So, coming with that in mind, price came down, targeted these weekly lows, which is an extremely important level, and rejected. In the process of sweeping these lows on NQ, We created an SMT, which is a divergence. It is a crack in the correlation of two assets. To explain SMTs very vaguely and quickly, SMT is where you take two correlated pairs like NQ and SPY, and you see right here, they move identical. However, on the daily, NQ comes, sweeps out this low, and SPY does not. In the process, one makes a lower low and one makes a higher high. Because SPY did not come and sweep out this low, it created a bullish SMT, which means that big money, institutions, people playing with big positions that are able to manipulate the market are coming in and moving the markets here. As you see, following this SMT being formed, we had extreme bullish pressure out of this low being swept. So, with that in mind, let's go down to the lower time frame. So, Friday, end of the week, I start this off not knowing where price wants to go. Because although we did come and sweep this low, price still looks bearish. I mean, by the looks of this, we are still in an obvious downtrend. Doesn't take much to see. However, it wasn't until price came up, swept all these highs, and closed above come Friday morning that we then see a market structure shift, which is a break in this 4-hour structure. We have clear downtrend right here, clear downtrend, and it gets broken here, which means a change in the state of delivery. Price now appears to be moving bullish. It means buyers are coming in, people are pushing price up. So, with that in mind, I've now established on a higher time frame that I have a bullish bias, right? So, more than likely, I will look for trades that are targeting the upside. Price in general is looking to go to the upside, right? Well, the great thing about ICT is depending on what you look for, I personally am an intraday trader. I trade on the lower time frames. I get my entries on the lower time frames, enter my trades on the lower time frames. So I'm able to take this higher time frame and knowing that price is fractal, I zoom in and look for a place areas for entry. In this, I marked out areas that of importance relative to my bullish bias where price can reject some change of direction, manipulation, etc. So, to be very brief, I'm going to tell you about the areas that I marked out here on NQ. To start off, I like to mark out the previous day high because from my experience of back testing in the day, whichever previous day low or high gets taken out first, that usually is an indication of where price is going for the rest of the day. Don't take that completely. However, I found that depending on where price goes, it usually continues in that direction when one of those levels get taken out. Besides that, I look at, as we said, where does price like to come into? Inefficiencies, fair value gaps, equilibrium, and areas of liquidity, right? Resting orders. So down here, if we zoom into the 15, we have this 15-minute fair value gap, which is where is it? Am I slow, bro? Oh, yes. We have this 15-minute fair value gap right here. And then also, we have this 15-minute right here, which honestly I should have marked out as well. I saw it, but I did not put anything for it. The reason why these areas are so important is because, as you see right here, price, you see a big move creating this area of inefficiency as price displaced above, broke structure, and turned bullish. As you see, at the end of Friday, we have a bit of a sell-off, with that continuing into after hours. Price taps into this inefficiency, and then come Sunday, we see a bounce out of that. And then again, earlier a couple hours ago, we come into this and we're bouncing out of it, which leads me to believe that price is holding bullish because we are respecting this 15-minute gap. So I like to have these areas marked out because should price inverse one of these levels, that may lead me to change my bias or at least take a trade to another recent area of importance, like this 15-minute fair value gap. However, that is more of a scalp trade, and I like to trade continuation moves generally or higher time frame sweeps of liquidity so I can catch higher lower risk moves that are going to make me more money and also lose me potentially less money. So with that in mind, price holding this bullish fair value gap with this one below potentially that it might want to come into as well, likely not because we're holding this one. And on the flip side, on the higher time frame, we have this bearish 4-hour fair value gap. So what does this mean? Obviously, I've stated that based off of this one, break of structure, two, sweep of liquidity, and three, SMT being formed, that price is bullish, right? However, we still have this daily bearish trend. Would we come into this level right here and reject, we could see price want to come into this inefficiency right here, 4-hour, bounce off of it, and this can be a good indicator of where price wants to go. Also, what I like to look for in trades is for price to tap into a prominent level and then reject off of it, in which I will then take a reversal. As you see from what I'm saying, I'm basically setting myself up so I have opportunities that can reveal themselves without me even being on the market. So when I get on the charts, I can see, okay, price did this and this based off of this level. And now I'm looking for my actual setup, which I trade sweep of liquidity, a area of displacement, fair value gap, an inverse of it or a pullback into it, and then continuation or reversal, which I will then show in my live trading. I hope that wasn't overly confusing for you guys. I definitely have to get better and probably slow down with my explanation because it's a bit chaotic. But hey, man, I'm excited. This first day on the charts, showing you guys what I got going on, what I've learned so far, and what I look for in my trades, what I'm looking for in my trades. And yeah, man, with that being said, we have our levels placed. We're going to see how these react, how price reacts to these levels throughout Asia session and London session. And I will see you guys in the morning tomorrow. Peace.